Stocks take a leg down across the board after scaling a new high on likely profit-taking, though they recover from lows. Realty and Telecom are the bigger drags, even as financials are the ones which are eking out big gains.
Vodafone PLC has sold a nearly 18% stake in Indus Towers, leaving it with just about 3% in the Telecom Towers company. Vodafone says that proceeds from Indus Towers stake sale will be used to repay existing lenders.
The street sees a rush of block trades worth nearly 25,000 crores. Beside Vodafone big trade, large block trades also get executed in Gland Pharma, ZF Commercial, Sansera Engineering and AU Small Finance Bank.
Prestige Estate says it will consider fundraise and monetization of its hospitality business in a board meet. Mrs. Bector's Food will also weigh a fundraise proposal at its upcoming meet. These even as AMI Organics and Craftsman Automation launch QIPs.
Crude climbs to its highest level in 6 weeks, with Brent scaling $86 per barrel. As summer demand leads to a drop in inventories, China reports strong retail sales and geopolitical tensions escalate.
Hello and welcome to Halftime Report. I'm Ekta Batra, with me is Mangalam Malu, and it's turning out to be a session which is quite mixed. So we are off the day's high for all of the indices rather. But remember that we are already sitting on record highs, so it's okay to see some amount of profit taking. We have the mid-cap index, which is down around 0.7%. The advanced decline ratio, or the breadth of the market, is in negative terrain, so that just corroborates what we are seeing in terms of the mid-caps. The Bank Nifty is holding with a gain of around 1.2%, record highs there, and the Bank Nifty outperforming as compared to what we are seeing for the frontline indices. Overall, yes, profit booking on the screen, but no complaints, Mangla.
No complaints whatsoever. In fact, if anything, the good part is that despite the profit booking, we saw a recovery from the lows. The options data did suggest that there could be support around that 23,450 mark on the Nifty, and that exactly corroborates with today's low as well. So from today's low, we've actually seen a near 90-point recovery on the Nifty. The Sensex is back in the green, and we have the Nifty Bank, which continues to do well, even as it is about 70-80 points away from the record high that it hit earlier in the morning. The second half of trade will have Nifty Bank more importantly in focus, largely because one, it is a Wednesday, it's Nifty Bank weekly options expiry, and secondly, HDFC Bank, its largest constituent, is doing extremely well in today's trading session, supporting the frontline indices, and giving it company is actually ICICI Bank and Axis Bank as well, both of them doing well in today's trading session. Cash market volumes extremely high today, and that's largely because a lot of block deals that happened as well. So in the second half of trade, what happens to the mid-cap index and the Nifty Bank is something we'll be closely eyeing, because US markets are shut for trade today on account of the Juneteenth holiday. But speaking about the block deals itself, a massive number of them that took place. Hormaz joins in with a roundup of all of them. Hormaz.
A couple of them that I would want to highlight in particular. The first one being ZF Commercial, that took place in today's trading session earlier in the day. And that is where around 14.5 lakh shares, around 7.5% of equity changed hands in the block deal. The total deal value is said to be close to 2,300 crores. Remember, we had reported yesterday, citing sources, that WAPCO Asia was planning to sell up to 5% equity in the company. Now, as of the March quarter shareholding, WAPCO had around 75% stake in the company. So they plan to sell another 5%. So we'll keep an eye out on who are the buyers and sellers in this transaction. And the other one that I wanted to speak about was Sansera Engineering, and that is where around 62.5 lakh shares, or close to 11.5% equity changed hands in the transaction today. The deal value is set to be around 750 crores. You can call this a clean out trade, because the two entities that were supposed to be selling their stake today had the exact number of shares in the March quarter shareholding as well. So you can consider that as a clean out trade. The stock doing well after the block deal, trading at a record high, but as you mentioned, it's block deal galore in today's trading session.
Absolutely, Hormuz. Well, in fact, let's talk about some more and other stocks which are in focus. We have Vivek joining in. He's going to apprise us of Gland Pharma, which is in focus on account of the block deal which has taken place there. Prestige, which is in focus as the company is considering fundraising, and AMI Organics as well. Vivek.
Well, that's right. It's the day of very large block deals, and Gland Pharma, Fosun Pharma, that held a little over 57.8% stake in the company, today paid close to 5% stake. They've been wanting to trim the stake as far as Gland is concerned for quite some time, but today one particular block deal going through. The second stock on the radar is Prestige Estates. Remember, Prestige Estates, last week we had told you about how the company was going ahead and proceeding with its IPO as far as its hospitality segment is concerned. Yesterday evening to the exchanges, they've given two separate pieces of information. First one, what they're saying is that the company itself, the holding company, would be looking for a fundraise. They could either use the QIP route, the pref route, or the rights issue. Second, confirming our development, they said that they will be looking at a fundraise even in the hospitality segment. This could be either via a primary or secondary issuance of shares. It'll be interesting to see, when does the actual IPO come to fruition, and also what will be the valuations that the company can garner from this particular value unlock that they are looking at. And lastly, AMI Organics, QIP over here, the company is looking to raise close to 400 crore via the QIP route. Indicative floor price is a 5% discount to yesterday's close. 1240 is what the indicative floor price is. They were dilution of almost 9% of the pre-issue capital, and the fund usage will be for debt repayment as well as CAPEX requirements that the company has envisaged.
All right, thanks a lot for that, Vivek. A bunch of stocks doing extremely well. The fertilizer/chemical related stocks, Deepak Nitrite, for instance, up around 4%, Coromandel up around 3.5%. The biggest recovery is what we've seen in the sugar space. So Balrampur Chini, for instance, was in the red for most part of today's trading session, has now recovered and moved to the high point of trade, and giving it company on the way up is Chambal Fertilizers with a gain of about 8%. But the biggest of all block deals today was the Indus Towers one, where it slumped after Vodafone has sold 18% stake in the company, a near $2 billion deal, $1.8 billion to be precise. Nimesh joins in with all the details here. Nimesh.
Hi, Mangalam. So as you rightly pointed out, the mother of all deal was indeed the Indus Tower block, where the Vodafone PLC has now confirmed that they've sold 18% stake via block deal. They've raised close to $1.8 billion. However, they'll be retaining the remaining 3% stake. They were owning 21%, and they've sold 18% in today's block deal. In terms of buyer, there is a confirmation now from Bharti as well that they have indeed bought 1% stake in today's block. So they will be close to 49.9% in Indus Tower after today's block deal. Among other buyers, I understand there were a few domestic mutual funds within that. One was an anchor investor, and within the FII, some large hedge funds have also participated in today's block deal. Now that the block is done, post-deal, there's going to be some adjustments in the free float as well. So there will be some, weight increase for passive investors. MSCI and both MSCI and FTSE will see these changes over the next few days. So their expectation is that for MSCI, the inflows would be close to $100 million. And for FTSE, as and when the changes happen, the inflows could be close to $55 million. So additional $155 million will be done because of the weight increase for passive investors. Now, as you speak, the deal is done. It's likely that Vodafone will retain the remaining 3%, but they've sold 18%. This also means that the big overhang of supply is now out of the way. So next focus will be on Vodafone Idea and whether any money comes to them. But for as Indus Tower is concerned, the deal done. Some large guys have bought, and now there will be passive money as well, which will follow over the next few days.
Okay, all right, Nimesh, thanks very much for that. So that's a big deal which has taken place and will be used, the funds will be used for debt reduction for Vodafone. Well, we'll take a short break, but we'll get you a lot more on the markets, a lot of stocks in focus at this point in time. All that coming up on the other side. Welcome back. Well, for the markets, the Nifty just about flattened out as we speak. We have the mid-cap index, which is also, recovered a little more from the last time we spoke about it. So 0.77% is the decline that it was showing, and now it's showing a decline of around 0.69% to put it into perspective. Well, let's talk about more stocks which are in focus. Zomato is in focus on the back of a positive note from UBS. Mangalam, lot of action taking place in Zomato. A
lot of action taking place in Zomato, and the note that is coming from UBS is also, taking note of this action in Zomato itself. The price move is telling you that maybe a deal is, or a deal announcement is in the offing. What is that deal? Both the companies, Zomato and Paytm, have told the exchanges that they are in talks for a potential sale of Paytm's entertainment business to Zomato, a business that will actually aid Zomato's going out offering. Now, what is going out business for Zomato? It's basically dining at restaurants, or people, when they use their Zomato, to go out of their homes instead of ordering in. And Zomato has actually, looked to scale this business up itself. In FY24, that business did about 258 crores of revenue. Very little as compared to the overall scheme of things for Zomato itself, but this is a business which they believe can grow. And one of the reasons, or one of the highlights of last year when it came to outdoor events, was the Zomaland event that they did in multiple cities as well. Paytm Insider is the second largest ticket booking platform in the country. So if they do go ahead and purchase that for reported 1,500 to 2,000 crores, UBS's back of the envelope calculations do suggest that valuations are reasonable, and it will only aid Zomato's going out business going forward, and as a result of which it would be a positive. They have a buy rating with a target price of 250 on the stock, but they haven't added to their estimates of this acquisition yet. So once the acquisition does come by, the street will then start ascribing valuations to the synergies of scale, etc. And as a result of which, we'll also see a further round of up move come by on Zomato. A far cry from what would happen, say, 2 years ago, when Zomato would go ahead, acquire a company, and people would bash them for entering into unnecessary adventurism. But this time around, they're saying 12,250 crores of cash on their books. Why not use it for growing some of their businesses?
Okay, all right. So that's the update coming in on Zomato. That stock holding up with a gain of around 4%. UBS target price stands at around 250. Let's see whether that M&A comes through or not. Thanks, Manglam, for that. Well, sources now tell CNBC-TV18 that the Ministry of Heavy Industries is looking to revamp the 2016 capital goods policy. Parikshit is here with more details on this. Parikshit.
One of the first decisions taken by the NDA 3.0 government was to begin work on a new capital goods policy. Sources say the Ministry of Heavy Industries has formed a task force to work towards a National Capital Goods Policy 2025. This task force is headed by Secretary Heavy Industries and has 17 industry bodies and 15 ministries as members. One of the key objectives is to review the shortcomings in the Capital Goods Policy 2016 and work towards a framework that can make India a global champion in capital goods. The government is considering ways to include new and emerging areas in manufacturing like automation, robotics, AI and Internet of Things. One of the key priorities is to promote export-led growth and reduce import dependence, and also focus on niche technologies and high-end technologies in India. Industry sources say India needs a new outcome-oriented capital goods policy, as the earlier one has not been effective in demand generation and promoting exports. CNBC-TV18 has learned that industry bodies have recommended a new policy which puts emphasis on machinery used in energy transition, as energy transition is a $120 trillion opportunity. The industry also wants clarity on how the 1 lakh crore R&D corpus announced in the budget will be utilized for the capital goods industry. The industry has told the government that while the current share of capital goods in India's manufacturing is 12%, there is a strong potential to take it to 25%, and a focus on capital goods can increase India's manufacturing GDP overall, also exports. We would like to reduce heavy imports of capital goods or machinery used in manufacturing and become a key exporter. Currently, China is the largest exporter of capital goods, followed by Germany, US, Italy and Hong Kong.
All right, thanks a lot for that, Parikshit. So that's about the capital goods policy. But the markets now, the Nifty is in the green, and that's the breaking news of the afternoon right now. After recovering nearly 120 points from the lows, the Nifty is moved into the green, and that is courtesy the Nifty Bank, which is now moving once again towards a fresh all-time high. And also aiding this up move is the IT index. So if you just look at the IT index, you would see that it's just about inched into the green. So the Nifty Bank is doing well. The Nifty IT is supporting it right now, and as a result of which the Nifty has seen a strong recovery from the lows at the high point. So take a short break, come back. On the other side, we'll get in some trading strategies with Pritesh Mehta. Welcome back. You're watching us here on Halftime Report, and like we pointed out, the markets have seen a big recovery from the lows of today. Nifty is up 140 points. was barely in the green, now just about, around the flat line. The Nifty Bank is doing a lot better. What's interesting is that today's low on the Nifty is something that we will keep an eye out on, 23412. The street was hoping for some support coming in at 23,400 to 23,450, and the recovery has been from that zone itself, led by the Nifty Bank. And, it's the Nifty Bank which has been led higher by HDFC Bank and some other private sector banks. So that's as a result of which good news for the market. The only couple of things we need to keep an eye out on, the India VIX, that is spiking as well. So for the last couple of trading sessions, even as the market was moving higher, we saw the VIX move higher. So that is something that tells you that we may face congestion around that 23,600 for the Nifty itself. And the Nifty active options tell you that as well. On the way up, we have the 23,500 call, which is extremely active for a premium of 123 rupees, telling you, levels upwards of 23,600, 23,625 may see some sort of congestion. At the lower end of things, though, 23,500 put with a premium of 50 rupees, telling you 23,450 is a strong support for the frontline index. It is a Wednesday, which means it's Nifty Bank weekly options expiry. 51,000 is a mark that everyone's eyeing. 51,000 put, equally active, telling you that, that would be a strong support for the index. And on the way up, the 51,500 call writers are equally active, telling you that if there is an up move on the Nifty Bank, it may perhaps for today not extend beyond 51,500 itself. So roughly around 51,200, 51,300 is where we see the Nifty Bank sustaining. Indus Tower and Chambal Fertilizers are two stocks that I'm watching out for, which may enter F&O ban with the kind of open interest jump that we've seen. Indus Towers, we'll have to see, whether that open interest jump subsides or not towards the end of trade, if it was taken just for the block trade.
Okay, all right, Manglam, thanks very much for that. So that's the entire F&O setup. But let's, in fact, get in some market perspective. Earlier today, we did speak to Manish Sonthalia of MK Investment Managers. Listen in to his view on the market going ahead, as well as those key budget expectations. Listen in.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India. Plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner, and all the three players must, act in sync. But anything like 10 times EV to EBITDA on FY26 numbers, you'll have some reasonable upside even from these levels. Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Okay, so that's the opinion coming in on the markets. We need to take a short break on that note. But up next, a lot more lined up. In fact, we'll connect with Abneesh Roy, who's the Executive Director at Nuvama Institutional Equities, to talk about the entire FMCG space. Stay tuned. Welcome back. Well, the Nifty just about consolidating with a positive bias as we speak. The mid-caps also have recovered a little more in the advanced decline ratio. There's a tad bit of an improvement which has taken place there. So let's see whether there's any kind of further buying on dips which is taking place for the broader markets especially. Well, we do have Pritesh Mehta joining in from Yes Securities to answer all of the technicals of the market. Well, Pritesh, welcome to the show. Give us a sense in terms of how you would approach a couple of these banks. We have Indices, ICICI, HDFC, Kotak, all of these corporate private banks which are really doing well today. Is it prudent to probably go long at these levels?
Yeah, hi, good afternoon. I think, see, first we need to understand the Nifty Financial Service Index, because these banks has a good amount of weightage in this particular index. So HDFC Bank, yes, the stock has been a big laggard, big underperformer. Now it has created a base coming out of it. I won't be surprised if the bank takes out the previous peak of 750 also. So I think I'm bullish on this stock, and I think we can see more upside. When you talk about SBI, SBI has a steady outperformer, steady mover. It is taking its time, but the base has been strong. So I think in a matter of time, the stock goes up around 1,000 levels.
Right. And individual stocks, what are you looking at? Because as we speak, some of the stocks are coming off lows and they are moving higher. Are there any opportunities here?
Yes, in fact, mid-cap IT index. We have created one customized mid-cap IT index, and that is moving higher. So within that space, we like something like Birlasoft. This particular stock, has gone through, has seen a recovery. After went through a period of consolidation, now it's coming off a strong base. So we can see a rally towards 780 levels, and the stop loss would be around 660. Another stock that we like, that is Federal Bank. We keep talking about the large cap IT bank, but this stock has formed a good base and moving higher. In Federal Bank's case, we have seen a continuous pattern of bullish data breakouts, and if we can see a level of 195 on the upside, the stock would be around 166.
All right. And would you have a view on something like a GMR Airports that's out of F&O ban and now staging a bit of a recovery at the high point? The other one is Vodafone, because Vodafone too, for most part was under pressure. Now that the deal is done, and now perhaps the street has an idea of what they will do with that money, the stock has recovered about 5% from the lows. So Vodafone and GMR Airports, would you have a view?
Yeah, so I think I would rather be in GMR infra. This stock has a good amount of sign consolidation than breakout on the upside. When you look at the potential, the chart patterns, we can see a bullish anchor columns continuous basis, and then have to follow through more to the upside. So on the upside, we can see level of 120, 125. And ideally, I would probably it's too much of noise in this counter. So rather, be with the stock which is provided a steady move or has a good chart pattern.
Right, Pradesh, thank you so much for joining in and giving us a view on the markets, a lot of individual stocks and some chart patterns as well. Speak to you soon. In the meanwhile, let's talk about the consumption space. A lot has happened in the consumption space over the last couple of weeks. One, the election-related uncertainty and belief that maybe there may be a lot more money coming in the hands of people in the new policy, and thereafter a buzz in the FMCG stocks. And then you had belief that continuity of policy may not actually mean populist budgets. So to discuss all of this and more, we have Abneesh Roy, who's the Executive Director, Nuvama Institutional Equities, joining us today. Abneesh, good to see you in. Been a long time. Let's start with consumer staples itself. The belief was there is rural recovery in the offing. The normal monsoons would aid demand going forward. And then the added benefit of maybe some sort of populist measures coming by. Of these three triggers, two seem a little iffy. Populist measures may not come by because everyone is believing that there is continuity of policy. And secondly, Manisha just told us that, rainfall in the month of June was a lot lower than expected. So what's your call on consumer staples now?
Sure, thanks. We expect that from Q2, a lot of the issues what the sector has seen in terms of negative pricing, local players, rural slowdown, etc., will start reversing from Q2. Q1 will be more of the same what we saw in Q1. For example, for Hindustan Unilever, we continue to see negative pricing. Even for Asian Paints, we'll see that issue, which was there even in Q4. So we see that from Q2, maybe HUL will start seeing flattish pricing, and in H2 we'll see the price growth coming back. Coming to a specific question on the coalition government, see, now budget will be in the July 3rd week, so we'll have more clarity. But yes, definitely consumer companies are expecting that on the rural and even on the urban consumer, there should be some comforting good news. On the rural, the expectation could be more NREGS outlay. In the past, what we have seen is it's more based on demand. So even if the outlay initially is low, we have seen that eventually NREGS demand is, the spend is much, much higher. Similarly, on the MSP hikes, this government in the last 10 years has been more measured. So could there be some change? Definitely in coalition politics, we do see that could happen. Plus, in the next 2-3 quarters, we have got 3-4 key state elections. I would say that there is an optimism that in terms of MSP and in terms of export also, if you see onion exports was impacted, and then we saw what happened in Maharashtra. So clearly there is an expectation on monsoon. If you see, these are very early days. So yes, I will say that yes, 20% lower than the expectation is disappointing, but very early days. We have a 4-month season, so taking a call based on the first few days, I think it's very early days. But yes, I would say that we continue to remain positive on Varun Beverages, Pidilite, Godrej Consumer, Nestle. These are unfortunately at 52-week high also. We continue to like United Breweries also. Valuation comfort is high in HUL and Asian Paint, but currently the triggers are missing in those two stocks. Yes.
Oh, okay. So triggers are missing for the big boys such as HUL and Asian Paints. Abneesh, what about the jewelry retail space? You know, there's an expectation that there's going to be a lot more formalization in the market taking place. In that context, then, what would you like in this particular segment? The Titans of the world, the Kalyan Jewelers, the Sencos?
I think clearly that formalization still huge headroom is available. If you see, hardly 30-35% has been done. So almost 65% of that is available. And last 4-5 years, we have seen a lot of government steps are helping there. But in the near term, I think especially first half, Titan will continue to underperform because it has very high base in terms of margins. The competitive intensity is very high. The lab-grown diamond also, if you see, is 1/10 the cost of the real diamond. So that is a clear risk which is there. In US, we have seen lab-grown diamond really take off. So it's a good stock to own from a 2 to 3 years perspective. But I'll say from a next 6 months perspective, the results will be muted. And that's why there could be some time correction, or there could be some absolute correction also. But yes, clearly the other dwellers like Kalyan, etc., we don't have coverage, but they are growing faster given they have a smaller base and they're expanding faster also. So overall, they will also see the competitive risk which is there for from the local players because gold prices are up, and definitely studded diamond is a risk currently from the lab-grown diamond. So I will say that next 6 months, Titan especially, we are underweight. We are downgraded the stock a few weeks back, and we continue to remain underweight from the next 6 months perspective on that stock.
All right, so underweight on Titan for the next 6 months. Today, that stock is actually underperforming the other peers that you pointed out as well, Kalyan and Senco, both of them. There was a brokerage note that came this morning. Abneesh, I wanted your thoughts on two sectors in particular. One is the QSR space. That seems to find its feet back right now. At least the stock price is telling you that, you know, there is some traction here. And the second one is the retail space. Trent and Avenue Supermarts, both of them too have begun to do well once again. Trent was always doing well. So Trent, Avenue Supermarts, ABFRL and the QSR space. Your call here.
So we continue to remain positive on Trent. We upgrade the target price and then it touches that. So that issue of high valuation remains. But if you see the main growth driver for Trent is Zudio. And if you compare Zudio number of stores versus Domino's, it is still a 3x to 4x kind of a scale up possible. And good to note that even Domino's expects that there could be 4,000 store universe versus the current 2,000. So Zudio is currently hardly 500 plus versus Domino's at 2,000. So the scale up opportunity is big, the urbanization and new cities getting added. So we continue to remain quite positive on Trent, but it remains a compounding story rather than a valuation comfort story. On DMart, we had highlighted earlier that two of the issues which investors had on the slow growth or expansion in terms of stores that got addressed in Q4. We are seeing that margins also are coming back gradually because of the discretionary part of the segment also doing well. And we are seeing that the competition from the quick commerce and e-commerce also is becoming more rational, and that's reflected in the good share price performance of Zomato also, because clearly Blinkit is getting good valuation because of the improving metrics. So I will say DMart continues to remain a very good play on the compounding. Only 2 states they have a good presence. So I will say that stock continues to remain a very good compounding story. On rest of the stocks, we had pitched earlier, Aditya Birla Fashion. That stock again has done well because of the demerger news. But in my view, near term, the growth slowdown in the Van Heusen and that part of the Madura part of the business, I think that will continue. Pantaloon should do well, but our sense is near term, Madura Fashion will see weaker numbers. But it remains more of a demerger story for us. So we'll continue to prefer Trent, DMart in that space in terms of the retail. Now coming to QSR, yes, the stocks have underperformed last 1 year because numbers have been weak. But I think the recovery in terms of numbers of same store sales growth, etc., should happen post Q3 only. In that space, we like Jubilant Foods the most because they have already started seeing decent recovery in the delivery format. But in-store dining continues to remain a challenge.
Okay, all right. Well, you're talking about dining, and I'm going to ask you about Zomato because that one's in focus. It may, in fact, acquire Paytm's movie and ticketing business. What do you think of that possible proposal? Do you think the valuations will change considerably?
I don't cover that stock personally, but yes, covering from the media space, clearly that space has seen challenges in terms of movie viewing. We have seen that last 2-3 quarters, there is a challenge. But if I see structurally, clearly it makes a lot of sense for Zomato, given they get one more big growth driver in out-of-home, that kind of a consumption. So yes, I would say that it makes a lot of sense. But on the valuation, we'll get to know when the deal happens. But I think it will make a lot of sense because it's more of consolidation. And clearly for the number one player, Book My Show, it will be negative. But my sense is once the Cricket World Cup T20 ends, we would see the much awaited revival in terms of the movie viewing that should come back because that has been clearly a disappointment. The movie pipeline is good, but because of the elections, because of the exam season before that, and now the T20 World Cup, we have seen that the movie viewing has been a disappointment. But hopefully that should recover post that.
Do you have a view on ITC? Are you keeping it at bay till the budget comes and the GST Council meet?
Which stock?
ITC.
Yes, ITC definitely. What we are seeing is investors are waiting to see how the new health minister's policies are. Last year, there was a slight increase of 2 to 3% on the cigarette taxation. So we don't see any big probability of a sharp tax hike or even a moderate tax hike currently, because 2 back-to-back years we don't see. Second thing is cigarette legal volumes. Currently, there's hardly any growth, 2-3% growth. So in that condition, if there is a moderate or sharp tax hike, that will be negative for the legal cigarette and the smuggling will increase. The hotel demerger is mostly baked in terms of pricing. So for the stock to do well, now cigarette volumes have to come back to at least 4%, 5% kind of a growth. And the agri business, which has been a key disappointment, that also should start to recover. Those two things would be needed for the stock to do well. 4% dividend yield is good, but currently near-term triggers are missing for ITC.
Okay, all right. We're going to let you go on that note. Amisha, interesting chat as always. Thanks very much for joining in and speaking with us. We'll take a short break, but a lot more on the markets, lots of stocks in focus. So we'll be back with more. Stay tuned. Welcome back. Well, just watch out for a couple of stocks which are in focus. Z Entertainment is down and out today. It's down around 2.5% at this point in time. Remember, it's already lost over 40% on a year-to-date basis. The news today is that the CFO has stepped down from the position for personal reasons. So that's probably weighing on the stock. The CFO is Rohit Kumar Gupta, who has stepped down. They have an interim CFO. But nonetheless, that stock is in focus on account of that. And on the other hand, there are a couple of positives which have come in on a couple of these financials. So Indices Bank is in focus because Bernstein has initiated with an outperform and a target price of 1,800 odd rupees. And on Bajaj Finance, Bernstein has initiated with a market perform with a target price of 6,800 odd rupees. Indices Bank is the one that I'm talking about. So that should come up for you. It's one of the top gainers on the Nifty. In any way, let's get you an exclusive on the upcoming GST Council meeting. Sources say that there might be some discussions over retrospective GST action in the upcoming meet. Timsy is here with the details on this story. Timsy.
Well, yes, the GST Council is all set to meet this Saturday on 22nd of June. And one of the key changes that the Council is going to deliberate upon is to give some sort of a relief on the past demands. Sources say that the sectors which paid GST at lower rate versus that was applied by GST authorities, they might get relief from the retrospective action. The Council may consider a proposal to not to levy higher GST when lower rate was paid due to a general industry practice or the general trade practice. Remember, this particular clause was there in the pre-GST regime, and now in the GST regime, they feel that this change in the law is warranted. They are likely to introduce a section 11A in the law. And the Council may consider this proposal of the Law Committee to offer companies relief from retrospective action for lower tax payout. Council is also likely to consider not to raising retrospective tax demands where industry paid the lower GST rate in absence of clarity or in absence of specified rate. Also, the amendment in the law is likely to not to allow refund of GST or cess arising in cases where higher GST demands were paid by the industry. So that's sort of a little bit of drawback. But yes, overall, a very big move for the industry. The amendment in the law is likely to apply, what experts say, to the online gaming companies that are facing DGJ action. Remember, this is what experts imply. That is not part of the Council agenda. It is just that experts say that this particular clarity is going to help them. Also, some other sectors where experts say that this is going to help them is in the case of insurance companies, in the case of foreign shipping lines, foreign airlines, information technology, and yes, online gaming, etc. So let's see what happens finally when the Council meets on June 22nd to discuss this proposal.
Absolutely, Timsy. Thanks a lot for this clarity that, this is what experts recommend and this is not something which is on the agenda, because a lot of the stocks which are moving around in hope of this actually coming by may perhaps be disappointed if it does not come by. But the point is, like Timsy said, this is what experts are saying, that clarity on this would be useful. But is it there on the agenda right now? And is there something which is likely this time around? Chances for that may not be as high. With that, let's move on. With the NDA government getting down to business, all we need to do is keep an eye out on the budget itself. The budget will be presented on the 22nd of July, and that is something that CNBC-TV18 learns. After a post-budget consultation with the Revenue Secretary, the industry body CII has sought for an increase in capital expenditure by 25% versus 16.8% rise proposed in the interim budget. The CII has also sought for steps to provide marginal relief in the income tax at the lower end of the spectrum, with taxable income up to 20 lakh rupees. They've also sought a reduction in excise duties on both petrol as well as diesel.
We have had a range of issues that were discussed, very engaging discussion, and covering sectors like capital expenditure. Private capex has already kicked in, looking at agriculture, rural areas, startups, beefing up social infrastructure, looking at some employment intensive sectors like real estate and apparel and toys, and what kind of ways there are to promote it. So broad ranging areas were discussed.
In as much as our suggestions are concerned, we very specifically stayed away from any asks for concessions and exemptions, because I think it is more important to focus on the growth potential and what can be done to actualize it. And in that regard, we have followed the broad principles of simplification to enhance ease of doing business, to look at measures which can reduce litigation, and where there is litigation, what is a simple way out which works for both sides. So broadly, I think that has been our focus.
Main thing which was saying that we need to increase the ease of business in the industry, and Revenue Secretary was very upfront, and he said whatever other points will be taken up. And I'm sure with the positive mindset of the government, we will be taking, the industry will be benefiting from that, and for ease of business of India will improve many folks.
All right, and we also spoke to Dinesh Kanabar of Dhruva Advisors. He said that a simplified tax structure where there is one standard TDS rate for the salaried class was a key ask.
So our suggestion has been to have a very simplified TDS structure with a single rate. So there is a TDS for salaries, there's a TDS for earnings by way of race horses, or lottery, etc. And balance should be a single rate rather than multiple rates, which forces the tax withholder to make choices. And same thing for TCS. So today we have multiple rates of taxes. I remember for CNBC I had prepared a chart, and even when I prepared it as a practitioner, it was so difficult to really categorize. So we have taxes for long-term, short-term, different assets, resident, non-residents, all of that. And the question really was, is there a way in which one can rationalize number of, it can be done away totally, but can, for example, we have a common rate between residents, non-residents? Can we have doing away with the multiple surcharges that exist, all of those? So we put quite a few things out there.
All right, so that's about the budget. What we'll do is take a short break, come back on the other side. Our commodity corner, Manisha Gupta joins in with Ajoy Chawla, who's the CEO, jewellery business at Titan, to put focus on the jewellery segment. That space has been in focus all through today.
Welcome back to our halftime report. We are now joined by Ajoy Chawla. He is CEO, jewellery business Titan. Mr. Chawla, hi, thank you so much for joining us, and congratulations on your launch of 10th Zoya Boutique. What are the plans going forward now, and how many more stores are in pipeline?
Extremely delighted to share that we are launching our 10th Zoya Boutique. It's been a great journey. I think if you go back, we opened our only 4th boutique during COVID time in 2020. And today here we are launching the 10th. It is our 15th year as a brand. And I would also like to share that we hope that by the end of this financial year, we should be 15 boutiques young. That's a long way from where we were. You know, we were at 3 boutiques, and to get to 15 in the last about 4 years is something that we are very proud of. Brady House is special because it is located in and around the Kalagoda neighborhood, which has become a cultural capital of sorts, a go-to place for those in love with luxury, art, and, you know, anything quirky, unique, and beautiful stories. And Zoya narrowed down on this particular catchment.
Ajoy, also, when you look at gold, it's near all-time highs in Indian markets. Has that in any sense impacted the jewellery sales for you?
See, whenever gold rates go up, actually in the long run it works better because customers get even more excited by precious jewellery. So while in the short run, when it's a sudden spike, people do kind of become fence sitters, but once it stabilizes or it kind of marginally corrects, all the fence sitters come back in, and the confidence in gold and precious jewellery only increases thereafter. So we are not worried about these short-term spikes. But yes, what you say, gold rates have really gone up quite a lot, and perhaps that is also bringing in many more people into this market saying, hey, let's look at gold and precious jewellery even more seriously.
Oh, well, we have heard that and seen that happen as well. But Ajoy, also, it's not just gold jewellery, while of course that continues to be a big chunk, big percentage in the overall jewellery market. But we also have seen aspirations in other jewellery segments, like diamonds seems to be penetrating the markets quite strongly, emeralds, polki, other precious stones.
Yes, I think diamonds and precious color stones especially, and even semi-precious is kind of in. Zoya has always celebrated these precious rare color stones with patented cuts, and today we see the rest of the market is also kind of awakening in a big way, not just for weddings, I would say even for small occasions, because the rarity of the color stone, the origin and the cut enables self-expression, and Zoya has always been about self-expression and wearable art, and therefore the color stone is something that we have celebrated, which the world is now kind of, celebrating even more so, especially the Indian market.
How would you look at the overall luxury segment growth within India? I mean, we do understand that those numbers really surged post-COVID. So when you look at the last 2 or 3 or 4 years, what kind of growth have you noticed?
You know, we were looking at some reports and it stated somewhere that the luxury market or the luxury jewelry market in India has been growing at a 30% CAGR over the last 3-4 years. In Zoya, we have seen in the last 4 years a 40% CAGR. And we also think that the market is only beginning to come of age and it is going to grow even faster. One estimate says that the overall luxury market in India should see a 25 to 30% CAGR for the next 6 years. We ourselves have a lot of ambitious plans for Zoya, and we are expecting to kind of, do a 2.5x in the next 3 years on the last year's base. So exciting times for jewelry and for luxury jewelry in India for sure.
Oh, absolutely. Ajoy, also, what's your take on the changing scenario within the Indian jewelry sector here? We've seen more jewelry companies getting listed. You also are looking at more transparency, the expansions, the bigger brands are getting even more bigger. And then there's also this thing about more and more newer generations coming in for this.
I think this has been a secular trend. The formalization of the economy and the formalization of the sector is an ongoing piece. It is still only about a third of the overall industry. So I think this will continue to happen. I mean, demonetization, hallmarking, thereafter there was COVID, and all of these forces in fact have driven this aspect of this jewelry industry. I think many more players are going to come into this market. Many are on the anvil, and we will also see the emergence of new age jewelry brands. As you know, we are already seeing it. I think we'll see more of it. Luxury is here to stay. Many international brands are now seeing India in a big way. We are very proud to say that we believe Zoya is the largest jewelry luxury brand in the country today, and it's taken us 15 years, but we are very proud of that achievement.
Clearly, Titan and Zoya have a name of their own and class apart. But Ajoy, also, with the new government coming in, what are the expectations that you as a jewelry sector have with the new government, in sense of the next 100 days, the union budget would come in the month of July sometime, and then of course various reforms and policies. Is there anything that you have as a wish list?
I mean, we don't have any specific expectations. There is some work happening in Gift City. And therefore, is there some kind of guidelines and liberalization of the processes of buying gold and hedging gold in Gift City that we are looking forward to. But overall, I think with the customs duty being very high on gold, it has been a long-standing request that the government should reconsider it because it does lead to, a lot of illegal movement of gold in the country. But other than that, we really haven't, thought about what the budget should bring us. I think as long as the budget does a good job on the overall economy and management of the economy, consumer sentiment will be high, and I think good brands will grow very well.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. So interesting takeaways coming in from the Titan jewelry business. Zoya has opened its 15th store. Well, getting back to the markets seem to be very stable at this point in time. We have the mid-cap index, which is a little under pressure. It has been fluctuating a little bit and recovering from day's low only for it to be sold into. So currently the mid-cap index is just about lower by around 0.7%. Couple of stocks which stand out. Just watch out for the sugar space because that seems to be garnering attention this afternoon. Bajaj Hindustan, for example, is seeing good amount of volume and price action. That stock is up around 6% at this point. Well, with that, it's also a wrap on Halftime Report. Business Lunch will take all the action forward.